we embarked on a Bitcoin strategy. And when we did that, the enterprise value of our software business was about $66 a share. And as I'm speaking with you right now, the stock is trading $329 a share. Our shareholders have made billions of dollars since we started this strategy. No one's lost. If you actually look at the performance of Bitcoin since we actually bought $250 million of it and embarked on a Bitcoin strategy, Bitcoin's up 101%. That's the S&P's up 23%, the NASDAQ's up 15%, gold is down 12%, bonds are down 15%, and silver is down 28%. So in fact, Bitcoin smashed every single asset. The only thing that outperformed Bitcoin in that time period is MicroStrategy stock, up 166%. So we actually performed 1.6x Bitcoin. Now, if you look at what we could have done, we could have competed with the enterprise software companies in our industry. The best performing enterprise software company in that time period is Oracle. Oracle's up 39%. MicroStrategy's up 166%. IBM's up 2%. Salesforce is down 4%. SAP's down 40%. We're definitely not losing. Now, if you want to compare us to the best companies on earth, the strongest companies on earth that are more powerful than governments would be Google, Apple, and Microsoft. Those three big tech companies are up 58%, 46%, and 34% respectively. Amazon down 11, Facebook down 35, Netflix down 52. MicroStrategy up 167%. And one last factoid, out of the 500 S&P companies, there are only 14 companies that outperformed us in the time period. We outperformed 97% of the S&P, and the ones that outperformed us, you could have guessed, are like energy companies, and they were selling oil when oil hit $0 a barrel, and their stocks smashed back. So we're totally fine. I'm fine. The company's strategy is working well. If you had said in the second quarter of 2020, I want you to come up with a strategy for a low-growth, mid-size software company to outperform every asset class, all big tech stocks, and every enterprise software company by a factor of 3 to 10, right? This is the only one that you could have come up with, and we actually did it. I think what throws people off is that the stock got volatile. Like the way we've done it is with volatility. The company's stock traded a few $1 million a day when we started. Now it trades hundreds of millions of dollars a day.
So one of the reasons crypto, digital assets, went down was because discretionary spending came out of the market. So if you think of the legions of dollar cost average retail investors and just think of their rent or mortgage payments went up, their shopping bills went up. So suddenly, or if they were foreigners, the dollar went up. So suddenly, how the hell can they buy as much dollar cost average in crypto? They don't. So they stop. So what happens is you've removed a huge amount of buying power. So as these conditions change, that changes. Also, the other big players in the space now, the hedge funds, the crypto, the macro funds, and then the institutions, well, they're also a function of liquidity. So when liquidity is more available and cheaper for them, they can apply more leverage essentially in their portfolios. So what we end up with was a position where the big thing that correlates to crypto markets overall is some definition of liquidity. And you can use M2, global M2 year on year. That looks pretty much like Bitcoin year on year or crypto market cap year on year. We're at the very bottom. It usually turns around at this point because eventually the outcome is central banks have to provide liquidity in a recession because there's no liquidity. So forward-looking assets like crypto are picking it up. So they also have perfectly correlated to the turning points in the inflation cycle. So they kind of time the bottom, and I think it's time the top. So basically, I think crypto is saying, okay, inflation has now peaked, and therefore the marginal pressure from tight liquidity is gone. So my view is with, let's give it a probability, 70% probability. So that's pretty high conviction that the low is in. And therefore, we're starting the upside cycle. So the macro, I think for me, even though everyone thinks, oh my God, it's terrible, the equities are going to sell off. Well, the equity side of the equation, that correlation with equities was actually a correlation to liquidity. They're all actually correlated to the macro cycle. Can equities sell off further? Yes. Can crypto decouple? Yes. We saw that in March 2020, that crypto started going up when equities were going down because crypto is more forward looking. However, equities have actually priced in quite a lot already. So it's not 100% clear whether equities need to go down or not. So I did a Twitter poll recently with like 20,000 people responded, which was, do you think equity markets have further to fall? 70% of people thought so.
I think that the way to think about investing in Bitcoin is you should only invest what you're going to hold for 4 years or longer. And ideally, it's generational wealth transfer. And then you should dollar cost average into it. And for the average person, if they dollar cost average into it as a strong long-term store of value, they'll be fine. And the metric you ought to stare at is probably rolling the simple 4-year moving average, right? And if you look at the simple moving average over 1,458 days, it very rarely touches that point. It went slightly below it in the depths of the crypto crisis, and now it's trading above it. That number is 22,266. So if you think of that and you say, I know I'm going to hold at least 4 years, then it isn't that anxiety inducing. If you have a short time horizon, like you want to make money in 4 weeks or 4 months, it's going to be much more stressful because it is a volatile asset. And the volatility impacts two types of people. It impacts people that are short-term investors, that they want to make a quick buck or they just never want to lose money. And the volatility also impacts public companies or companies that rely heavily on GAAP accounting, because the volatility is detrimental to the accounting treatment because you have to always write it down. You can never write it up. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, and in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that there is a counterparty risk to pursuing this. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem.